Morning, guys. It's Friday, September 12th, 5:29 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. Matt Bennett is here. We're going to start out with the drought monitor because it's become very interesting here the last few weeks.
A lack of rainfall across the Corn Belt last week led to worsening drought conditions in much of the region. Missouri, Illinois, and Ohio experienced notable deterioration, while Iowa and Minnesota saw more modest declines. Roughly 20% of the region is experiencing some level of drought, up 6% from last week. Drought conditions in the High Plains remain limited. Week over week, changes were minimal aside from a slight worsening of conditions down in southern Oklahoma. Notably, North Dakota is the most drought-free state in the nation. When we look at the percentage of U.S. areas experiencing drought, corn country 13%, soybeans 22%, winter wheat 38%, spring wheat 13%, and cattle country 18%.
This is becoming pretty severe, Matt, in areas of the Eastern Corn Belt, the Delta, call it the South Central Corn Belt. Here's a map from our friends at Crop Profit. This is total rainfall over the last 30 days. And those light blue areas, those are areas that have seen nothing to just trace amounts in total over the last 30 days. And you're talking a big chunk of like South Central Illinois, parts of Indiana, Ohio, into a lot of northern Missouri, southern Iowa. What are we to make of this, given the projection for these big corn and soybean yields?
You know, I think that you'll see some of this today as far as Friday's report goes. Here's what I think, though, Joe. Okay, I'm just going to look at my own farm. We started cutting beans yesterday, and they're pretty darn good. I mean, it is on black ground. First stuff I planted in April. They were able to be, flowering by summer solstice. I mean, everything kind of fell into place, and I think they would have been just flat out incredible beans. But we didn't get any rain, in the last 6 weeks, so they're APH type beans or below, and that's something we haven't had the last few years. Okay, so yeah, we've been spoiled. Whatever. Here's my problem. A lot of our beans got planted a month later, like in May. And all this dry weather, I'm thinking 20 bushel yield hit, on some of this stuff that's going to come out in May, just based on what we've looked at. Pod counts still are okay, but the problem is there's a lot of flat pods, and we've had no rain whatsoever. So I think that whatever this September number is, I think it's subsequent to a further tightening or lowering of yield in October, because I feel like we're closer to a 50 bushel crop ultimately, as dry as the East has been.
I pulled the rainfall rankings map, and this is since August 1st, and nothing's really changed. Like August in itself was very dry, and then when you pull it out through the 10th or 11th day of September, you're still looking at the driest conditions of the last 133 years in a whole bunch of Ohio, some of Indiana, some of southern Illinois, Missouri. It's just it's not been an ideal late season at all.
No, I mean, you got to finish a bean crop with moisture. I mean, that's the thing. I mean, Pro Farmer Tours said, hey, pod counts are incredible. Everyone was all hopped up on them. But, the problem with pod counts, you got to be able to fill pods. I mean, I don't know. I don't want to be an alarmist. I'm just telling you that, on our best dirt, looking at the pod counts that we had on the field that we started with, they could have been 15 bushel, 20 bushel better than what they are. They're still good beans, don't get me wrong. It's just we had massive pod counts, and the yield did not show up. We just didn't have enough to get to the finish line.
Conventional wisdom would indicate that this dry August into September is more of a soybean thing, but what's the impact on the corn crop?
That's a great question. A couple things come to mind for me. First of all, you didn't finish well. Test weight's going to be an issue. Kernel depth's going to be an issue. I think you probably took the top end off a lot of this corn. In fairness, it was a massive crop to begin with, and so as of August 1st, what was the crop? Was it really a 188.8? I think that's the big question. But I think it's gone nothing but downhill since. I mean, the thing is, just the map that you've got up right now, I mean, even parts of Iowa are looking at 100-year plus type dryness situation. I mean, you've got to assume you pulled some yield out of this. Now, how much? I guess from my personal standpoint, again, because I'm going to go back there, we're probably looking at Probably looking at APH type yields once again, something south of last year. Oh, by I'd say anywhere from 20 to 30 bushel. It's going to be a good-ish crop. It's just not going to be anything like what we saw a year ago. So I think you could take several bushels out of this corn yield. And you and I talked about this Wednesday. I mean, methodology is different for this report. I don't know that you take it down 5, 6, 7 bushel or anything like that, but I could see us getting under 185 today.
All right, we're going to get to the report in a second. I want to hit this from one other angle. River levels are declining and are projected to decline even further. The Mississippi River at Memphis is 3.8 feet below normal, I believe, this morning. Is that what it says? But in any case, the projection is that we're going to be 6 or 7 feet below normal a week or two from now. And this it's become an annual occurrence. Will there be any impact here on the cash markets, on basis, anything like that?
Yeah, I mean, if you continue to go to these levels, I mean, you're going to be able to float full barges down the river, first of all, nor will you be able to full barges up the river. I mean, like we need fertilizer to go up anymore. I mean, and so, yeah, it's going to be problematic. And I mean, quite frankly, the forecast looks pathetic. I mean, for most of the Corn Belt, I mean, it doesn't look like we're going to get any rainfall. And so, yeah, you're looking at river levels going down. I mean, it's not like we need any other roadblocks as well, whenever it comes to the soybean export program. So, I mean, I don't know. It's going to be problematic.
All right, let's talk about the report.
So traders expect the USDA to lower its corn yield and production estimates today, though both are still projected to reach record highs. Similarly, soybean yield and production forecasts are anticipated to be trimmed but remain at record levels. The decline in yield and production estimates for both corn and soybeans stems from mounting concerns over disease and recent dryness. New crop U.S. corn, soybean, and wheat stocks are expected to ease slightly from last month, while global corn and soybean stocks are projected to edge lower, and wheat is expected to increase.
All right, Matt. So general consensus, we'll talk about corn first. General consensus among the trade is that this sort of situation will play out. You're going to see the yield cut by a couple bushels, but you're also going to see demand cut, and you're still going to end up with a carryout projection for the end of the new crop marketing year, which is, a year from now, of 2 billion bushels or more. Is that in line with your thinking?
Yeah, I mean, essentially, we took our yield down, or actually, we kept our yield the same from August to September. Okay, as far as ag market goes, we felt like 184.8, which is where we came, 184.8, where we came in before, was going to be, a record crop. We just didn't think it was as big as the USDA. We stayed there, for the time being. But what we also did is we raised our planted and harvested acres just a little bit. And then, of course, we took demand down. We thought feed and residual could stand to come down a couple hundred, actually. So we ended up with a carry out just a little bit shy of what your average trade guess is. We were just under 2. I think that it makes sense. I mean, you've got to understand there's a lot of wiggle room here. I think exports, there's every reason in the world to think exports could stay where they're at. Ethanol, a lot of it will depend on legislation, but right now I think you've got a fighting chance to hit their number there. It's just the feed number is too high, in my opinion. So you've got some wiggle room there.
So if you look at the average trade guess for the new crop soybean carryout, 288 million bushels, and that's working with the idea that the yield's 53.3, which is still very high. If you go down to something like what you're talking, like something closer to a 50 or maybe a 51, this thing could get incredibly tight in the United States very quickly, despite a poor export program.
Yeah, and so what we did, we actually kept our yield again where we were last month, 52.5, because we feel like that's the trend that we're going to have to go in. I mean, again, we're trying to guess what's the USDA going to say. I mean, yes, we're trying to also give our estimate, but we're also trying to at least be, guess what is the USDA report. I mean, that's what they say to do. What do you think they're going to come out with and say? And so 52.5, but we also took 100 million bushel out of exports. And so we feel like the USDA has got some ability to do that. I mean, our program with other countries is actually really good. It's just that China hadn't done anything, and so we ended up with a carryout just a shade over 300, even though we took our yield down 1.1 from USDA's number. So, I think you could probably take even more air out of the bag as far as exports go, but yeah, it could get super tight domestically. It's probably not going to be real tight on a world standpoint, but it could be super tight domestically.
Guys, the report will be out at 11 a.m. Central Time today. We will have an update for you on Monday. Premium subs, I'll have a video blasted out 15 minutes after the report. Let's go to export sales.
U.S. corn export sales were poor last week, falling below pre-report expectations. Net corn sales were reported at 21 million bushels. The print was down 74% from the prior week, with Mexico as the largest buyer for the week. Net soybean sales were reported at 20 million bushels. The print was down 34% from the previous week, with unknown destinations as the largest buyer. And net wheat sales, they were at the lower end of expectations at 11 million bushels. The print was down 2% from the previous week and 43% from the prior 4-week average. Japan was the largest wheat buyer for the week.
Matt, did you see that there was a soybean shipment to China reported in the report?
Yeah, we heard that yesterday morning. And so, yeah, you look up and the board was up 9 cents at the time. And we're actually having a morning call, and someone said, hey, we shipped one shipment to China. Well, it's a start, so maybe it's a sign of things to come. I think one thing that was exciting to me is that they're actually going to come in here and get a sorghum program going in the next 30 days. They've shifted their stance there. And so they've bought a lot of sorghum over the last several years.
Elaborate on that. What have you heard?
Yeah, what they said was that China came out and said that they are going to go ahead and start buying sorghum off of the U.S. They've clearly not been buying any, and within the next 30 days, their program is this is the way that I read the article, that their program was going to start.
Interesting. Okay.
Yeah.
So when we look at corn sales and the marketing year has just started, you can see that little dot here is where we're starting. Second best export book of the last 10 years. This is fantastic, and we are actually ahead of the pace needed to hit USDA projections, although it's very early. Soybean sales, exactly the opposite. We're not only the worst of the last 10 years, we're the worst seasonally since 2008. Not good.
No, it's terrible. I mean, obviously China's buying more beans than anybody else in the world easily. And so, yeah, I don't know. We've got to get some sort of a resolution there. There's no doubt in my mind that if we don't get a trade deal with China, they're going to inflict about as much pain as they possibly can on us through this. They know how important it is for us to sell soybeans to them, and so yeah, you could take yield down 3 bushel and it not ended up being bullish, Joe, because we have to take our export program down 300. That's a possibility. I'm not saying it's going to happen. It's just one of the things I'm a little bit concerned about whenever it comes to this export thing.
Brazil's government had their report out yesterday.
So CONAB, in its final grain production report for the 24-25 season, they projected the corn crop at a record 139.7 million metric tons and the soybean crop at a record 171.5. CONAB also raised its estimate for last season's soybean exports to 106.7 million metric tons. The upward revision in exports reflects stronger Chinese demand as the U.S.-China trade war drags on. Brazilian farmers recently wrapped up harvest for their 24-25 corn crop and have already begun planting their first corn crop of the new season.
So this is the corn crop. They're talking about that they just finished harvesting the second crop, and the CONAB is up to damn near 140, and USDA is still at 132. Do you think they're going to come up today?
Yeah, I mean, whenever we got to estimating our world numbers, we actually hedged this thing just a little bit as far as world production was concerned. Obviously, we were taking the world production down quite a bit, with our U.S. number going from 188.8 from the USDA down to our 184.8. But what we ended up doing is we kind of hedged this somewhat, saying, well, maybe USDA would raise 3 or 4 million metric tons. I'm not sure that's something they're going to do. They've been sitting on that number forever. And so I feel like they won't do that. But basically, we dropped our world carry, a couple, from last year. I think the overarching thing, in all honesty, Joe, is that, first of all, these guys said, hey, our crop's a lot bigger, but we're not going to export any more corn. I mean, they're using all the corn domestically they possibly can. Yeah. I mean, I think we need to take a rule out of their playbook, first of all. But second of all, you look at world supply and demand over the last 2 years. I mean, we've eaten into world corn stocks significantly, and so basically we're not raising enough corn to satisfy demand. That's a really good thing to see.
Yeah, it is, and you wouldn't know it by looking at prices.
No.
Right now. We had CPI yesterday.
Consumer prices, they have climbed to their highest level since January. According to the August CPI report, prices rose 2.9% year over year and 0.4% month over month. Food costs were up 0.6% in August, marking the largest monthly gain since October 2022, led by higher meat and egg prices. There is still speculation that Trump's tariffs are pushing prices higher. Markets widely expect the Fed to cut interest rates at next week's meeting. Traders are equally certain of another cut in October, with a strong possibility of a third cut in December.
CPI at 2.9%. The 2.9% means that this basket of goods and services, according to the government, has increased by 2.9% over the last year. And that's the highest print that we've seen in several months. The CPI number hasn't gone down. I think the last time we saw a declining print was either April or May, and we've been up or sideways since then. Make no mistake, though, the basket of goods and services purchased by urban consumers is as expensive as it's ever been. And it almost always makes all-time highs like every month. Things just keep getting more expensive. But Matt, the rate cut thing's kind of crazy. Here's a tweet from Charlie Bolello. Stock market's at all-time highs. Home prices are at all-time highs. Bitcoin's at all-time highs. Gold's at all-time highs. The money supply is at all-time highs. Public debt's at an all-time high. Inflation is hotter than the Fed says they would like it to be, yet they're going to cut more than once this year. I mean, we know that a lot of our farm crowd would probably like to see some rate cuts, but I don't know that it's helpful for the inflation situation.
I don't know that it is either, but I mean, it sure sounds more and more like all the time that they would cut the, foregone conclusion that you're going to get at least one, maybe two rate cuts before the end of the year. And then they're talking two next year, so I don't know. I'm with you. I'm not sure it's the right thing to do, but I mean, I certainly don't think I'd have a whole lot of my customers that would argue with it. You know?
Are you hearing much in terms of operating loans for next year? Is anybody into renewal season yet?
Well, yeah. I mean, I've heard quite a bit actually with some of the banks that we work with. Essentially, it's with it being fertilizer time. I think there's been some conversations had as far as, I think the rates are decent. It's just there's maybe a little bit tighter atmosphere, as far as what the grower is going to be able to access, depending on the situation they're in.
What did cattle do yesterday?
Cattle futures were higher. Live cattle were 62 cents to $1.45 higher, and feeders saw gains ranging from 107 up to 212.
Matt, cattle market thoughts? Is it over?
Yeah, I don't know that it's over. I mean, some of the cash trade actually was pretty strong here over the last couple of days, just from what people told me out in the countryside. And so, anytime the cash trade stays strong like that in this whole move that we've seen, it seems like the board has come fighting back. I mean, I don't know, Joe. I mean, I really don't. You're such elevated prices that you still have to have some sort of a cautious tone. But yeah, I mean, it hadn't made sense for a long time, and I don't know that it's going to start now.
All right, guys. Outside market's pretty quiet this morning. Report is at 11 a.m. Central Time. Matt, thanks for joining us. Have a wonderful weekend. We'll be back on Monday.